All right, everyone. So I am very excited for this topic, not because of what I'm going to show you guys, but more so what I'm going to get out of you to really understand who you are as people, and more importantly, who you are as a trader and what your strong suit may be. And hopefully you'll see weaknesses in yourself when I talk about like the main purpose of what this whole section's about. The biggest thing that I want to start off by saying is knowing when to buy. Like that's a topic, obviously. There's no such thing as a perfect entry. There's no such thing as a perfect exit. The only thing that's perfect is making sure you follow through with the plan you had, you charted correctly, and you executed. Everything comes back to execution. And I know a lot of people are like, well, if I execute and lose, why would I be happy about that? Well, if you execute where you needed to and you sell for a loss where you knew before even entering, this is my cut level, that is a successful trade because you planned for it. Why would you be upset about executing and successfully following through with the plan? Why even make a plan then? And this is one of the biggest things that me as a person, I could not really find settled ground with. I talked to you guys today earlier, the play I called out with Amazon calls today. I got in based off a level in the smaller frames. When I zoomed out, I realized maybe this wasn't rushed, but my plan, I had to stick to it. When it broke a certain level, I sized light enough that me cutting, I think it was about 40% loss. My size light was the same as me sizing normal and cutting for like a 5 to 10% loss. So me using to my advantage, I know I'm an emotional person when I oversize, which I think every trader kind of is, depending on your account size and how much money you put in. But me sizing light, it's like putting your feet in the water and not just jumping in right away. You want to test the waters out. You want to understand, okay, like, was the execution proper? If it was, the only thing that matters with knowing when to buy, knowing when to sell, following your plan, you are literally looking at the percent ratio. There's no such thing as like, I only made this much money. If you size only $100 and you sell for 50%, that's $50. But from a percent perspective, 50% is a very, very good return. If you size $1,000, selling for 5%, you just made $50. The money was the same, but the percents were not as good both ways. Selling for a 5% win, what if you have a 10% loss? You just wiped out all your gains. That's why I'm so heavy on execution. I'm very heavy on sizing light, letting the play work out. And that took me a long time to really process and figure out how to make that work for me. And then as I learned my little edge, I can give you the knowledge I learned from that. And hopefully, like Ange was telling me earlier, he just had one of the biggest days that took out a lot of losses that he had the past few months, a few weeks. So he's starting to learn. And Ange, I'm using you as an example a lot today, since you are very vocal. You like to put out what you're doing so you get feedback. Oversizing causes quick sells that you should not have done yet. Oversizing, when you're in the green, you're going to sell early if you have a slight pullback. When you size light, you're more focused on the byproduct of what happens. You're entering the trade. What happens after that, that's the byproduct. So sizing light, you're not really interested in, I'm going to sell at 20% because I was up 40, now I'm down back to 20% gains. If the chart is holding for calls on a bullish sentiment, you're focused on, I'm size light. The byproduct, money, obviously. If you sell, you make money. If you sell, you have a percent gain, you have a percent loss, whatever the case may be. But you're not really focused on that idea when you're sized in for the chart and not just making money. And I feel a lot of people, the hardest part about that, if the trade goes the way you thought it was going to go and you initially planned, the first regret, which I always had as a trader, I should have sized heavier. If I would have sized heavier, I would have made more money. This would have made up more of my losses I've had in the past. If you have that mindset going into the next trade, you may not enter where you wanted to. You may oversize and realize I got to get out before it's too late. Maybe you're red 20% and you don't want to sell because, oh, I sized heavy. I can't afford to lose this much. It messes with the idea, and not even the idea, but who you are as a trader and what you've built on a solitude. So as we talk about this, there's going to be a lot of just us looking at charts. I'm going to show you guys zones that I personally am looking for on specific stocks. If you guys want to throw out tickers, we can look at those together. And I want to have your info on why you're looking at this and not just, hey, look at this and tell me. I don't want to make this a charting session. I don't want to make this is how you chart. I want to know what you're looking at, and I'm going to tell you what I personally see, and we're going to have that discussion back to back, basically. A lot of people, I feel like, they know how to make money. No one knows how to make money. I mean, no one knows how to keep money. Making money in the market's easy. I'm sure all of you have made at least a green trade one time. But have you kept that money? Have you executed to grow that money on a compound basis? I know when I first started, the first few years, not even months, but years of starting with either the stock shares, with penny shares, I would trade. And then when I got into options, I would have huge gains from a percent standpoint, not just money. I made a lot of money, but it never stayed. When I had those huge percent gains, it would literally like boost my ego. Oh, I'm finally figuring this out. Like, I know what I'm doing. Execution went out the window for me, only because I wasn't like in a sound mind to realize this isn't happening, and I'm not just making money out of nowhere. I'm following like the chart. I'm following what I have to do. I'm repeating the same system of a plan, and not just I got to get in before it's too late. The minute you fall off track, you don't know how to buy anymore. You don't know how to execute. That money, that financial standpoint is going to pull you away from what really matters. And that's just how I personally feel. If you think money is the driven motive as to why you're trading, that's fine. But you also have to realize the plan you have has to stay very solid, very repetition, the discipline. The motivation's fine. But I'm sure a lot of you know motivation is not enough with most stuff in life. You have to truly love the journey, the losses, the wins, the hardships. Nothing clicks until you're at like that breaking point. I know a lot of people, you may not have like be profitable right now. It took me a long effing time, and it was like demoralizing. It hurt me. But when you finally just like realize I don't have to focus on what happens when I trade, I just need to make the trade happen, follow the chart, and the byproduct will come. Like, there's no forcing the money, there's no forcing anything, because anything you force, for me at least, it just keeps running farther away. I'm chasing what is meant for me, but if I just let it come to me, it's going to stay forever. So the biggest thing that I hope that we can discuss, whether it's verbally, one-on-one with one of you guys that want to unmute yourself, or just type in the chat, which would be easier for me so I can keep talking and like answering more questions. I just want to show you guys the like biggest points of what I personally enjoy. Zones are very important. Knowing when to buy, knowing when to wait and not force like entry in between the middle of a consolidation. It's a 50-50 chance when you really just put in a trade because, oh, I got to get a trade in. Or, oh, I just lost $100 on the last trade. Now it's looking better. I want to re-enter. You don't want to trade because you're down, you want to get it back. Or overall, I've lost this much on the week. I want to oversize because one trade oversized and I'm selling at 30% gains. I'm back to break even on the week. Are you really trading because you just want to like have fun with it and you love it and it's like your die hard, like I want to do this 10 years from now? Or are you just trying to make that money and then feel good in the moment? A lot of people here, I'm guaranteeing they've had huge wins, maybe $1,000, a few thousand, maybe even making $500 in a day or in a week was like a huge point in your life of like, this is really possible. Where's that money right now? Like, do you actually still have that money? Were you actually executing after it happened? So many people, and Perez just said lost, me included. I don't speak on hypotheticals. I don't speak on trying to lure you guys in to listen more. I'm speaking from my past. Everything I speak on, I've been through, I've dealt with, because that's how I can be so sincere to you guys. And I hope you feel that when I talk. I would struggle all the time because I would make money. I want to make more money. Oh, I just made 500. Now I can size heavier because I just made more money than usual. I'm not ready for that upgrade of size and heavier. I'm not following a plan. I don't even have a plan. So why am I so hyped on making X amount when I've never had it before? I don't know how to handle it. And it's just gone the next day, the next week. And then I'm back to, man, I'm struggling. I don't know what I'm doing. Like, I don't know if this is going to work. This can work. And I'm sure a lot of you, as you grow, as you go like day to day with this, you're realizing this is possible. I just can't do stupid things. I have to follow a system. I need a journal. Maybe that's going to help me. I have to size light to learn how to play the chart and not just let my emotions ruin all my trades or make my trades. There's so much to really digest from a self perspective. Trust me, the money's there. It's not going anywhere. There's no rush for it. I hope you guys are slowly comprehending why I'm speaking this before we dive into all this, because I don't just want to dive in to say, this is how you would buy. This is where you should buy. This is the best low risk, high reward. That's all nice. But end of the day, comprehension, mental attitude, this literally will make you or break you. And if you don't like hearing that, you are free to stop listening, head out because you don't want to hear about the mental side. It's so tough confronting what you shouldn't be doing because you don't want to think that you're wrong in what you're doing in life or just in trading. You have to do that stuff to grow, and it sucks. And that's why I'm here to help you guys. If you open up about your struggles, or as we go through more topics, I can literally help you walk one foot in front of the other and figure out, you as a person, what you have to do to make this work. That's the whole purpose of this. I mean, you're here for free, literally to learn. So talk and take advantage of it. That's the biggest part that I hope you guys start to realize as I do these with you, because a lot of new people are coming in, and that's what I hope you start to like verbally acknowledge. No one here is we're not gonna meet in real life probably. You guys see me, you know what I look like. I hope to meet each and every one of you, but don't feel like I can't talk because I don't want to be bashed. I don't want to be ridiculed. Everyone here, including me, including Hassan, Jarvis, anyone that you've looked at, we all were losing at one point. And not just losing, we were literally like struggling. We hated what we were doing, probably depressed. We all come from the same starting point. No one comes in and just makes money, makes money, makes money. If they do, they were learning before ever touching financial plays in the market. So now I'm going to slowly get into this section. We're going to pull up some charts. I'm going to show you my little strategy I use with setting alerts so I don't just sit and watch a screen all day waiting for a setup that's probably not even going to happen on that day. I want you guys to realize you have freedom with trading. And I just realized Donnie just said trading for freedom. You literally have the choice to make a trade tomorrow. You have the choice to not sit in front of your computer or monitors and just go outside the whole day. Maybe go be with your kids, maybe go be with some friends, maybe just read a book all day. You have the freedom to make your own decisions. Like that's literally like, I don't know many 9-to-5 jobs under a corporate aspect that let you just show up when you want. They let you clock in whenever you want. You can just show up and not work and just sit around all day. You literally control your destiny with this journey. And the work you put in, it is going to show 5 years down the road. So many people have potential. So many people have like that drive in them. But where's the work to show for that? You have so much time to make this work. There's no rush. And if you think there is a rush, slow down and realize how to make it work. Let the money come as you execute, as you properly size, as you learn your personal edge as to what needs to be done. Because I know each and every one of you here can do this. Even people that aren't here listening, that are struggling, they can do it too. They just can't let the aspects of money, the aspects of I have to succeed to make people happy, make myself happy. Losses are fine, and that makes me happy because if I execute and I follow a plan, that loss was planned successfully. If I don't sell when I wanted to and it keeps going more red, at that point, I'm like not even mentally demoralized, but my account is showing it. I have to look at that the next day. I have to look at that after hours, like, why did I make that mistake? So I'm going to show you guys knowing how to buy, knowing how to keep those emotions out of the picture. And I'm truly, truly hoping that you guys can really comprehend where I'm coming from. I hope you guys are going to type questions because I want to make this as like Q&A as possible. I literally just spent the whole first 15 to 18 minutes talking about mindset. And if that bothered you, this may not be for you because this is the main thing I teach people. I hate the idea of I'm going to show you how to enter. I'm going to show you when you should sell. I'm going to show you my little indicator system. None of that matters if you can't follow a system. None of that matters if you can't execute properly and know why the heck you entered. If you don't know what you're waiting for to see, that is the only purpose of trading. Your emotions overtake any type of system or plan that you're going to learn from any mentor in the world. And if you don't believe that, go try. You can take someone's blueprint, try and do it yourself, but there's little stuff in between those little systematic things that they show you, that they talk about. They struggle to make this work. So you really think you're just going to do what they taught you and never struggle again. Mentally, you're not going to sell when you should. Mentally, you may rush a trade because it didn't hit the exact entry point. All of this stuff is going to build up over time. And if you don't find that little like tweak that has to happen to make your personality work with trading, this is literally not going to happen for you. And I want this to happen because seeing people happy makes me happy. And I think is Coco, I think you're still in here. I saw him just now type. I saw the scroll come down. But literally having people around you that have the same vision, the same idea, all of this stuff literally comes full circle. If you're by yourself, look at the people that are in the Zoom right now. Add them as a friend, talk to them outside of this class. Like, you guys are here for the same purpose. We're not the same culture. We may not be like the same type of personality, but we're all here for the same reason. And we can use that to fuel each other. Like, having people around you is literally like the biggest growth possible before the success starts to come. So now, so I can stop venting all this crap. Coco, if you believe it, you will achieve it. If you deserve it, the universe will serve it 100%. And I have a question on a trade I took whenever free. Let's go over your trade towards the end of this session, and we can all look at it together if that works. I want to get like the basis point, because maybe after I talk about this, you may see what you may have messed up on or what made it so perfect. And then everyone can see how you traded, and we can use it with what I'm about to show you guys. It's very simple stuff, but sometimes the simplest stuff in trading is what makes you the most money. That's the craziest part about people that sell all these, like, oh, here's my secret, here's this. There's no secret to trading. Everyone has their little niche that works best, but end of the day, what is your specialty? What is going to make you a better trader? So as we go through these next classes throughout the rest of July into August, I'm going to show different styles that may link with people that may feel like this isn't going to be working for me. I want to learn this specific topic. That's when you have to be verbal to me so I can put that information into a topic at some point in the future. So we're going to start with a very, I want to say, simple look. We're only going to look at SPY today. I don't really want to look into like all these bigger names. We're going to look at what Ange did earlier today. So that's going to give us a good idea of what he as a person looked at and what he did. And I hate when this stuff doesn't automatically sync. Okay. So just for you guys to understand, a lot of you, and I'm not what are those rectangles? So I'm gonna talk about that, Mo, don't worry. So the reason I'm on the 1 minute, a lot of new traders, they can't really understand if they're looking at a 15-minute time frame with candles. Me as a person, I can see what the smaller frames are doing within each of those candles. I can look at a 30-minute candle and basically picture what a 5-minute did within that 30. So for every 30-minute candle, there's 6 5-minute candles within that. For those of you that may not understand, that's how it works. So I'm starting on the 1 minute time frame just so you guys can understand from a smaller perspective how these zones play out, how patterns usually play out, how you can find trends, how you can find those like fake drops that end up pushing back upside. A lot of people are so focused on the smaller picture, and that's why I want to show this first before I zoom out and show you what the bigger picture can provide for you. A lot of new traders, all they look at is the 1 minute, the 2 minute, the 5 minute, and that's perfectly fine. But hopefully this will give you a new perspective as to, before I enter, I'm going to zoom out. And this is when I'm going to talk about a trade I had today that I can verbally show you guys and talk about and give you that perspective as to why what I did as a light position, I just should have never taken. And as you can see, I'm going to teach you off of my flaws as well. I'm not just going to show you stuff that I wish I would have done this. Oh, I wish I didn't take this. I'm going to speak from the heart with everything I do. And I want you guys to realize this is like a review for me as well. This isn't just I'm teaching. I'm literally breaking myself down so you can see what I fucked up on and you can use that for your advantage. So literally looking at the 1 minute on SPY here. And Mo, just to break this down real quick for you, the reason I have a highlight here is because this was a rejection this past week on a cup that's forming right now. So this is like a cup and handle formation. I'm on the 30-minute right now. We had a tap out back here at the top, if you can see that. So this tap out right here, let me actually make this bigger for you guys. We had this tap out, came down. We tried to push the very next day. That's making a lower high. So this is a bearish trend at the moment. Since we did reject and we kept dropping, this is a bearish scenario. As we came down, I had a highlight here that went back even farther. I'm not going to keep zooming out, but just to show you this like smaller frame on the 30-minute, this held and we curled back upside. At this point, now we're seeing trends reverse. First part, we had downtrend, bearish, lower highs, lower lows. Yes, it's not a pinpoint perfection, but it's the idea of seeing the idea of it, the trends, the patterns, whatever it may be for you. Seeing this, it's a bearish sentiment. If you're on the smaller frames, you're not going to realize that probably. You're going to see SPY open up on this day right here, and you're going to see straight green, green, green pre-market. You're going to chase and hope calls keep pushing, not realizing the previous high on the day before, that's a rejection. If we did keep pushing up, this could have made a double top. A lot of people on the 1 minute, the 2 minute, the 5 minute, they're not focused on what just happened the day before, or maybe a few days even earlier before that, that could correlate with the current price action. So looking at this on the larger time frame, me as a trader, for like how I am, I'm not going to buy calls if we push it open, because I know, okay, if we push, we basically only have enough room to fill a potential double top. What is this? Literally like not even a point higher. So is that risk worth it? Is me executing and buying calls at open, it's pushing pre-market, it's looking strong in the open, not knowing what happened the day before or any historical level that could represent a rejection, is that a smart play? That's the biggest thing I'm going to try and show you guys. Looking at historical price action, understanding everything that happens in the past is going to have an effect in the future with price action. None of this stuff happens because, oh, a green candle went up, it came back down. Everything is played in. Everything is systematic. Everything is already predetermined. We don't move the market as retail. We don't have the finances to move the market as retail. We are playing off of the effects of what hedge funds, what market makers, what banks do with their billions, their trillions. So if you think when you buy in, oh, this has to go. No, it doesn't. Notice how I said this has to go. You're hoping. This last topic we talked about, hopium. You're hoping the trade goes in your favor. Look at the chart and take out that emotional standpoint. Why should this go at open? If we do go, you better be trimming if this double top does contest, or this highlight is. That is literally a hypothetical rejection. So using the idea of like trends and how this all works, notice how we come down, a cup and handle is forming. A cup and handle is literally, we hit either a double top, we hit bearish sentiment on the downside, we start to come down heavy. As we hit a focal point of a buying zone, heavy support, we start to curl. We form a base, which if we zoom out even more, which I'll do this real quick for you guys. Notice how, yes, we came down, but all we're doing is holding trends on a larger time frame, which is bullish. I understand the concept of higher lows, and we broke on the downside. Until we break this previous higher low, we are still in a larger frame bullish sentiment. The market is not bearish until the previous higher low is broken. If this red highlight would break, the next zone we're watching is either the previous higher low or the higher high that happened right here. We're playing zones, guys. We're not buying and hoping. The larger picture gives you those gap fills. I am very heavy on, I'm going to buy at this level on the chart, and I'm going to sell at this level on the chart. I'm not selling because I'm up 20%. I'm looking at the chart and I'm basing my plays off of what the reaction to price action is going to present to me as a trader. I understand, oh, I'm up 20%. I'm happy with this. I got to get out. Well, what if you're red 20% the very next trade? That's a 1-to-1 risk reward. You just broke even after having a quote unquote, I just had a great trade at 20% gains. Was there more room that you could have held that contract and make more money? Was there a purpose as to why you sold? Maybe there was a rejection on the call that you had and you didn't want to risk a rejection, so you sold for the profit you had. That's perfect. You followed the plan. You sold because of a price action level that historically could reject. That's perfect. But if you're just buying and selling because you're up 20%, what are you really learning outside of I bought in and I made 20%? End of the day, I'm happy. I'll come back tomorrow. If you come back tomorrow and you're down 20% and you size the exact same, that previous day does not matter no more. Like, I understand, oh, it was 20% though. It doesn't matter. You just lost the money you made doing the same system. Maybe you didn't even sell at 20% loss the next day and you're holding down 30, down 40. Now you're overall red, even though you had a great trade the day before. So that's why I'm very big on finding zones, finding the correlation, finding what works and filling the gaps on your plays. Don't worry about the percents. Don't worry about the money you're up. If you oversize, that's all you're going to worry about. So you need to realize that. We're not in this game to get rich in a week. Would it be nice? Yes. But if you get rich in a week, how are you going to keep that money? You got lucky. How are you going to grow it now? Because in my eyes, it's not going to be possible. Yeah, Ellison, this cup and handle I actually played with, I think Coco's still in here, but me and him were watching this. The reason I had this rectangle highlight right here, going off the trend line and the previous zone right here, the double top, I was using this zone as basically a support if it held, if it pulled back. As we were up here, I'm not focused on a bounce off this trend. Because hypothetically, even though if it bounces off this trend, how much higher is this going to go? Yes, we have the top part of the yellow highlight, but overall, we've seen it break trends before and then wick back up. So I'm not going to rush in because, oh, this trend held of higher lows, the bullish trend could hold. I want to see confirmation. I'm not going off a pattern. I'm not going off a trend. I need an actual level based off entry when I form my executions. So the main thing I look for, I use trends to basically monitor a stock, and I use zones for entries and sells. The zones are basically support and resistance, supply and demand. That is what I focus on the most. As those supply and demands hold, I'm focused on the patterns they form in the process. As we came down, the only thing I'm focused on is, okay, if we don't hold here, we have a bouncing point down here. So I was prepared. If we didn't hold, I'm prepared down here. When we came down and started to curl, I understand a lot of people are like, and I'm going to take this down to the 5 minute just so you guys can see more candles. So it's not very like compacted with 15 or 30-minute candles. I want you guys to see more of the bigger picture. If you're on the smaller time frame, this major sell-off we had right here, that was towards the end of the day. So I completely understand entering end of the day with calls after a major drop-off, breaking low on the day, breaking previous low on the day. That's not like an emotional trade that you want to take, like, oh, I'm going to get calls because it should hold. That's not confirmation. That's like, I'm hoping it holds. It should bounce. This sell-off's not going to keep continuing. You want confirmation. You want execution to be a secure process. Overnight, we pushed, came back down at pre-market. At open, straight consolidation. There was not much room for this to do anything. A lot of people saw it pump it open. Oh, it broke pre-market high, it broke yesterday, earlier pre-market high. I'm going to buy calls at the top. A lot of people buy breakouts. That's fine. There's nothing against it. I have nothing against it, but I know who I am as a trader. I don't trade open. I don't trade breakouts. I'd rather sit and watch it happen because having that adrenaline, you don't have to be in the trade for it. If adrenaline makes you excited to trade, realize you can watch something and just pretend you're in it. You're not going to make money, obviously, but if you're trading because I want to have that feeling of like, oh my gosh, you can watch a trade and just pretend like you're in it and trick your mind into thinking you're in that trade. Learn from it. You're not going to be focused on the percentage at that point. You're trying to learn and you're tricking your mind. I'm in the trade. Let's see if I'm emotional thinking I'm in this trade. I do it all the time for myself. If I miss a trade, I will watch it and just act like I'm in. If it drops heavy, I pretend like I'm red. I let my mind trick me into thinking I'm really down on this trade. I monitor my emotions with it. I pretend like I'm sized this much. If I'm down 30%, if the level breaks that I would sell at, I act like I'm following my system like I usually do. So when seeing this heavy drop off at open, a lot of people in the 1 minute, the 2 minute, whatever it may be, this heavy red candle would have shook them out if they bought calls on this break. Because using pre-market highs, a lot of people use the pre-market high break as a confirmation to buy calls. So buying calls up here, this 5 minute candle at open, the second one, wicked up heavy. If you sold, great. You make quick money. But if you're holding this, hoping for more, right back down to where it opened up practically. Everyone thinks you have to buy the breakout and then just hold it. If you're buying the breakout just to trim and get a quick percent, that is perfectly fine. But you have to realize getting a quick gain off a breakout is going to definitely get overcome by holding in red too long because you want to wait and see how the trade works out. I don't trade breakouts only because going off the day of, I have no specific levels as to what's going to happen. If I zoom out, I can use historical stuff. But if you guys are starting to realize how I talk about what I do, notice how before the sell-off happened the day before, literally, I was telling you guys this in the Discord. I have never seen SPX or SPY consolidate like this for an hour straight and not move towards the end of the day. Usually power hours, last 2 hours, the market moves. Like I'm not saying 20, 30 points, but it at least like continues in one way for about 5, 10 points. I have never seen this happen this way before. Just up, right back down, back up, back down, back up, back down. Yes, it ended up selling off, but if you're in puts at the very beginning of this, hoping for a sell-off, you would have had a hold for a whole hour straight for a 0 DTE contract, for a 1 day out contract, whatever it may be. Could you emotionally hold that? I was watching this just to see, okay, let's just see what happens. I'm not going to buy in, but let's see what happens. This sell-off happens, puts chase, people swing puts because, oh my gosh, we broke low on the day down here. We could gap down overnight. Sure enough, we open up basically right where we closed, if not higher. Yeah, Ange just said Theta will eat your contracts up. Consolidation on 0 DTE or basically any contract for a week of expiration, consolidation is going to destroy your contract. The chart is holding. If you got calls on this consolidation, why would you sell until it breaks on the downside? By the time it breaks on the downside, you're probably down 40, 50%. I don't mess with consolidation. I like it for an extent of a specific setup on the larger picture. Looking at the picture like this, it's a waste of my time. I need confirmation as to why I'm entering, not just, oh, this is consolidating. It should push into the day. Should, if, maybe, hope. I don't mess with none of that crap. I need like solid evidence. I need a purpose as to, okay, how could this move? Why would this move? Where's the gap if it breaks upside? Going back off the next day, heavy sell-off. On the larger picture with the 5-minute, this is considered for me a heavy sell-off. I'm not saying like, oh, it has to come all the way down here. I'm not focused on that type of sell-off. I'm focused on the day of, literally from the high of the day, being at roughly, what is that? 433.27. Within not even 30 minutes, it came down that quick. I'm not saying that's like a quick move, but for people that bought the breakout, imagine how they would feel if they saw this just come straight down. Oh, it's pushing back up again. I'm going to keep holding my contract. Straight back down again. I'm going to sell. I can't afford to hold this. Not even 30 minutes later, look where this is. Right back to high of the day. Ange said you don't use volume. I do use volume, and I watch tape occasionally, but I'm more so focused on price action, the trends. I'm focusing on like how much volume is coming in, but end of the day, liquidity grabs, support resistance, those speak more volume than actual buyers and sellers. I want to catch the bigger picture zones, and that's what this highlight was down here. I'm not saying I'm going to enter the minute it pops in here. That's just this level has to hold and show strength to go more upside. As it holds and pushes up, I will look for an entry based off the reaction. I'm not entering out of, oh, it opened, it held above, this is going to keep going. I need evidence. I need a reason and a solid reason as to why I'm going to buy in, why I'm going to hold this and trust the move back up. This heavy wick down, I mean, look at this. The candle came down and finished green on the 5-minute. A lot of people, I guarantee, got shaken out. They sold their calls. Maybe they bought puts thinking this is going to crash. Within not even 10 minutes, we're right back up to almost high of the day again. And as the day moves on, look at that move. That's when sizing light, trusting the move, that's what matters for me personally. Because when you size light, you're not focused on, I'm up 30%, I have to get out. You're focused on, okay, we're moving upside. I can afford to keep holding this. I'm not scared if this comes back down because overall I'm sized light enough that I can watch and see how this moves. Sizing light, you can make more money than oversizing and selling for 20, 30%. Why is your doji green and my doji is red? The one low in the day, you mean? Do you have a pre-market and after hours set for your charting? Yes. We will talk about that after this lesson, Ange. We'll talk about everything because we've had this issue with other people as well. So I know it's reoccurring at this point now. So going off, and I'm going to zoom back out to the 15 minute. As that held, The zone I wanted to see hold strength. It's not the fact I'm entering when it touches the quote unquote support zone, quote unquote, the green highlight rectangle. It's showing strength and pushing. So at this point, if I miss the move, I'm not chasing. Even though it kept running, I'm not chasing. Where is my entry going to be? Looking at the 15-minute, there was not many red candles for a pullback entry. So I'm waiting for the next day to happen, possibly. I'm not going to buy the breakout because every push has a retraction. Every retraction has another push to the upside, vice versa. The next day came, and this is the day that I think I hit the puts on the top of this candle. First, we had a triple bottom. At open, we came down, pushed back up upside. And sure enough, I'm using the previous day high to see what happens. A lot of people probably use the previous day high. They buy the breakout. That's their entry. Why do you want to buy the breakout when a lot of people are already buying at the bottom down here and they're selling as it pushes upside? You have to consider how other retail are possibly trading, how the hedge funds are trying to use these green and red candles to confuse you, make you chase, make you sell for a loss. The bigger picture keeps your emotions intact. It doesn't make you freak out when you're wrong. It doesn't make you think, oh, I'm wrong, I have to get out before it's too late. You're focused on the move that's going to be coming and not what's happening in the moment. That's why I personally don't like the 1 minute. I don't usually use the 2 minute. The 5 minute, it's okay. But I like to use the 15 to 30 and above. And that's for watching plays, not when I'm entered and then I'm watching. But before even entering, I want to see the bigger picture and why it's forming the way it is. Are the trends working out the way I hope they do? As this cup and handle was forming, now focus on this. I was telling you guys earlier, we're in a downtrend. Lower highs, lower lows. Once this support hits and we start to curl back to the upside, I'm focused on the trends now. Are we switching bullish? Are we staying bearish and still making lower lows, lower highs? As those trends reverse, I make my entries. So we had a bottom. We had the first pullback here. We're breaking upside. We're squeezing now on this rising wedge. Price action's coming to a quick pinpoint at the end of this. Which way is going to go? Up or down, up or down? I use my entries based off the trends, the price action, lowering my risk to maximize my reward. I'm not chasing the breakout, hoping it keeps going. I want to catch it where I can hold light and be down a little bit, but the trends are still holding strength in my direction needed. So when I'm entering off these higher lows, I'm focused on the bigger move. I'm focused on, obviously, if I go back to the 30-minute and zoom out, this yellow highlight is my target. I was speaking on this all last week. This yellow highlight is the target. If we curl and we hold, we're pushing right back to the yellow highlight. And sure enough, look where we currently are consolidating, right at the yellow highlight. I've been telling people this for I don't know how many, I don't want to say weeks, but days. I was waiting and I kept saying 4,500 is coming, 4,550 is coming, 4,600 may be coming. We are literally at the zone of my target. And at this point, I was telling you guys, if we push, I want to see a pullback. I want to catch this as support. Currently, we're at a rejection. So I'm not going to buy calls and just hope we break out. A lot of people do that, and that's fine. But for me, and just knowing how I am as an emotional trader, I will not just buy calls and hold, because for 3 days straight now, for 3 days straight now, we're consolidating. If you got 0 DTE and you wanted that big breakout, you never sold and you probably lost money, or you sold for like a 5 to 10% gain. Maybe you played on the 1 minute, you just played like the bottom to the top and you made money. That's perfect. But I like the moves. I don't like that little 5 to 10 point moves on a contract, not on a contract, but on a SPX, on SPY. Correlation with stocks, they all move different based off price action, but I don't want that peanut play, that small gain. I'm looking at the gap fills. So as we pull back down again, trends are not always accurate. I get that, but focus on where we are right now. We're holding this trend line. Mo said, is that a double top? This is, I wouldn't say it's a double top, but we are at the rejection / resistance zone. A double top is more kind of like this area right here. This is actually a double top. 2 pinpoints at the same location, and then it breaks on the upside, or it could reject. It just depends on how it happens. Since we're consolidating for 3 days straight, if we go to like the 4-hour chart, the daily chart, this would be a double top. But since we're on the smaller time frame, it's just a consolidation out of rejection. But it is considered, quote unquote, a top rejection, double top, triple top, whatever you want to call it. What is going to happen at this point? That's what I'm trying to figure out, because no one knows the answer. If we knew the answer, we'd all be rich. Market makers can make the market move however they want. They could easily wick this down. And I'm going to show you guys my thought process. I'm switching back to the 15-minute. No one wins a buy. I'm using SPY as an example. For the last 15 minutes, and Ange, we can either talk about what you have for your play with the recording on or off, but I would prefer to do it with it off so I can talk more verbally and not be as like stick to the lesson type thing. But going off of knowing when to buy, or like when should I enter this play? Look at this consolidation. I'm going to temporarily move this yellow down just to keep it out of the picture, because I only want to use these 3 days as a lesson teaching point for you guys. And I'm also going to take away these blue arrows just to take away distractions. I only want to focus on this right here. And if it makes you guys feel better, I can switch to the 5 minutes so you see more candles. I'm not sure how many people here use the 15 over the 5, but go ahead and type it in the Zoom chat. Would you rather me do this example on the 5 minute, the 1 minute, the 15 minute? If you want it to be done how I personally chart, I can do that, but I want your approval before I just do something. We have one person saying the 1 minute. Someone said the 15 is good, 15. How does Rippy God do it? So Rippy God is a scalper. So he usually looks at the 1 and the 5 minute. You do what's right, 15 is good, 5 minute. So we're going to do the 1 minute, the 5 minute, and the 15. We'll do all 3 of them. I'll start with what I do on the 15, and then I'll start with the 1 minute and go to the 5. So when I'm looking at this, this is literally how I trade. I'm breaking down my mindset for you guys right now as we speak. And this is literally going to play into effect tomorrow and Friday. Literally, this is going to play. I'm going to repeat this again. This will play into effect tomorrow and Friday. First thing I'm focused on right here. We did not touch that today. So basically, Mo, for your definition, this is a double top right here. I consider this a double top. Yes, it's very wicky, very consolidation sell-off, consolidation sell-off. This is considered a double top in my vocabulary for a 15-minute back-to-back days. Is pre-market also counted? Pre-market can be counted, but you have to realize volume in pre-market is not as heavy as market hours. It's nice to use pre-market levels, but don't get comfortable with it. They do work very well, and that's going to be a whole nother section we'll talk about later on. Pre-market is very good. OBO is very smart to use. After hours the same way as pre-market. Using levels and after hours or pre-market can be used, but Ange just said it, but it can be manipulated. A lot of price action in pre-market and after hours is not really made to use. It's a distraction. Are they very reciprocal with open hour price action? Yes, but you can't only rely on pre-market highs and lows, after hours highs and lows. A lot of it is just algos doing their thing. We can use them as a like visual, but I personally don't trust them with my whole heart. I use them as guidance. If they correlate with historical levels, that is something that I will interpret for what I do. Indicators I will not speak on for this lesson. This is just going to be zones. And we can talk about that at the end of this lesson if you want to. So using the 15-minute right here, right away, the first thing I'm noticing, smaller frames, lower highs, not meaning we're going to dump. Price action is squeezing. I kept this trend on the larger frame from earlier just to show you that we're holding trends based off the larger 15 and 30-minute trend line on the higher lows. Now we're squeezing with lower highs on the last 3 days of trading. Not meaning we're going to tank. Possibly we could, because we're at a rejection, which I showed you guys on the 30-minute plus. We're at a rejection zone right here. I'm not saying rejection. I'm not saying we're going to push heavy. Whichever direction we go, we are going to move. That is one promise I can make. The issue I have, if we push upside with a gap up or whatever it could be, will this rejection play a part again? Because if we do break upside again, this trend is invalid. As of now, we're making lower highs based off the last 2 trading days. So we have to use that for consideration. If I'm looking for a solid entry, this is when I use this 3-day zone point. We had a bottom right here. Pre-market levels, this is a good example, Mo. If you want to use pre-market here, it's very safe, but you have to realize you're waiting for this price action to come down to you. You're not forcing the trade because, oh, it only came down to right here. I want to buy in. You have to understand your plan you have to follow. My plan I have to follow. You don't have to follow what I'm doing, but I'm very patient. A lot of you know I will not force a trade if I'm not comfortable with it. When looking at the main zone, I'm focused on how will this hold if we pull back? This area right here. If we break this area, what's going to happen with this pre-market level? If this pre-market level breaks, where's the next level going off the zooming out? This is when I can use these things back here. The cup and handle all has price action for a reason. We had this extremely drop, push, drop, push, drop, push. So this level could be in effect all the way down here. And I'll make this blue color. This blue could be in effect. So you can't force a trade. You can't really tell yourself, I'm going to enter and we're going to push upside. I'm very big on knowing when to buy. And as you guys can tell, I'm trying to keep this topic in your head to realize there is no such thing as a perfect entry. It's all about where is your entry you're waiting for? Where are you going to enter? And if you do enter, where's your stop at based off price action? Where are you going to start trimming for gains based off price action? If you're focused on percents and the money that you're up in the trade, are you size too heavy? Could it be a malfunction in your emotional standpoint of, I enter when I shouldn't have. Next time I have a setup like this, I'm going to wait longer because I rushed into this position. That's where journaling comes in. Understanding what you may have messed up on, understanding what you did good, and you have to keep repeating that, like good energy, that good position sizing, that good execution. You have to understand what you are doing that's working and what you're doing that's failing. 15-minute wise, these are the literal only two zones I'm focused on. Pre-market here, if you want to use that, that's fine. But just like Ange said, it's manipulation. Right away it opened, we pushed. If you use the ES for like futures trading, not futures trading, but like the futures market with ES, you can use those levels more effectively because it's 24 hours. Outside of 4 p.m. to 5 p.m., that market's open 24/7. So using, or I think it's 6 p.m. You can use that. 4 p.m. to 6 p.m. Eastern, futures is closed. Or maybe it's 4:15 p.m., whatever it may be. Pre-market can be used, but you have to realize it's not always accurate when you can't see what happened at 2 a.m. Eastern or 1 a.m. Eastern or 3 a.m. Eastern. That's when ES comes into play because you can see where the actual volume was. You can see the movements. We're only going based off SPY for this example. If I take this down to the 1 minute now, I'm going to slowly take this out to the 1 minute and the 5 minute. These zones show you more of a visual now. For people that can't understand how a 15-minute works, the 1 minute gives you that visual. Look at this double bottom right here before the push back up. Look at this pullback we had at the end of the day, and we bounced right back to the upside. We didn't touch the zone dead on, but if you knew from a bigger picture, not just the 1 minute on the day of, I guarantee you this sell-off could have scared a lot of people. This could have scared people right here. The biggest thing that I was talking to someone about, as this was coming down, we both told each other, we're coming to a support zone. We're coming to a bouncing zone. We did not execute on that though. Maybe we were scared. Maybe we didn't want to risk it. That's fine. I don't look at stuff and say, oh, I missed out. I messed up. You can feel that way. But end of the day, now that I process it all, I didn't enter for a reason and I can't be upset about that. If I was prepared, I could have sized light and just held and trust the level. And if it does break through, we got this level from pre-market underneath as like a visual representation of if this pre-market low holds, we could push back up to the upside. Ange said if it breaks the support, then the trade gets invalidated. That is basically how it works. For me, I would say the major support at the very bottom for this is like this is like that. If it breaks, we could keep coming down. Going off the trend line, trends are not always 100% accurate. And I'm going to keep repeating that to you guys. Patterns are not 100% accurate. Trades are not 100% accurate. Zones are not 100% accurate. Indicator processing systems are not 100% accurate. You find what works for you to make you feel secure, make you feel safe, and you trust what you're going to get into. That's all trading is about. What's your loss on this if you enter? What's the risk? What's the reward? Where are you going to sell on the upside if you're correct? It all flows back to what you are doing, and is the execution worth that time, that emotional standpoint if you have one. You have to be careful with what you put your money into. You have to be careful with what you put your mindset into, because one bad trade, it could make you want to chase the next trade. It could make you think, oh, I missed the last one that broke out, I'm going to hold this one even longer. What if that continuation doesn't actually happen like the last trade? Everything flows back to what happened with emotions, with your execution. Did you sell when you wanted to? It's very, like, I keep saying demoralizing, because that's how it was for me. I saw a position do exactly what I wanted it to. After I sold, the very next time I hit the same entry point perfect, I held longer, knowing this is a rejection. Why did I hold this? And it came right back down. I should have sold based off the chart, not the fact of the last trade I sold at that rejection zone and it broke out massive. I missed out on so much money. I have to follow the plan. If I only size one contract, I have to get out at that quote unquote, that's my trim. If I have more than one contract, I can sell one, keep the rest. You have to play off what your actions are. Elson said, do you take into account previous volume candles from previous days into your analysis? 15-minute volume candles from this past Friday before close is relatively high, especially going into a potential supply zone. So I'm going to pull that up when I switch to the 5-minute, because just like what you said, using volume candles on the 15, the 30, the hourly, it gives you more conviction to hold the play. If you're on the 1-minute, a quick volume surge could be massive on the 1-minute, but on the 5 or the 15, it could be less than past candles. Ange, go ahead. Let me hear the question. Typing or verbally, whichever you want to do. I think he's gonna be typing, so I'm gonna keep talking. So using the 1-minute, it gives you a more visual perspective. The reason I brought up the 1-minute, Mo brought it up, but for a lot of new traders, the 1-minute candles are easier to see, they're easier to picture, but they're also easier to get faked out. They're easier to get scared when a huge massive red comes in. But the question that you have to realize is, are you entering for the right reason, the wrong reason? It's hard to really know if you're correct or if you're right, or if you're correct or if you're wrong entering off the 1-minute time frame. Because a lot of people, they enter a call on the 1-minute, they see a massive red candle. Is that going to freak you out? If it is, you may need to go up to the 5-minute, the 15-minute. I'll give you a quick example literally from today, because this is what I was talking to someone about when this happened. This massive drop. Look at this one candle in the 1-minute. I know you guys see it. I shouldn't even have to tell you what time it was. Everyone that was watching SPY or S&P, they saw that 1-minute candle happen, or they saw that massive red on the 5-minute, the 15, whatever it could be. This huge sell-off potentially put people in the position of, we just broke or are contesting low on the day. Intraday we broke, coming down. Did people chase puts? Did people potentially think, oh, we're hitting a double bottom right here, I got to get calls? A lot of stuff comes into play when you're on the 1-minute, but if you're on the 5, the 15, this is where I'm going to switch to the 5-minute now. And Elson, I'm going to bring up the volume candles as well in this example as well too. This 5-minute candle did not show any reason for a potential intraday double bottom. This 5-minute candle went straight down. No strength, no reason to buy into a call hoping for a bounce back. That's why I personally stay on the 5, because it makes me wait. I know who I am. I know if I'm on the 1-minute, oh, it's holding 2 1-minute candles on this point, I got to get calls before it's too late. Ann said you might be caught up in the 1-minute sell-off, but on the higher time frame, you might still hold based off strong trend. Trend strong, exactly. And also, like I was telling you guys, this double bottom from Friday, massive sell-off, push right back up, massive sell-off, double bottom, push right back up, broke high of the day. This is a heavy buying pressure zone. People are buying this up. So when we came down massive, yes, we didn't touch it completely, but this just gives you more of a reason to show we didn't have to come down this far to get the price action back up. People were buying the crap out of this when it came down here. Higher above the previous support, which means we now have a higher low based off the last 3 days only. Most of, but Theta would have crushed. Yes. Anything that comes down massive or consolidation, Theta is going to play an effect. But you also have to realize if you enter off a heavy sell-off that's at a strong support zone, if you enter light, you're buying when a lot of people are fearful. Think about retail. Don't think about market makers. Don't think about hedge funds. Think about classic new retail traders. They are not going to buy based off their like confidence. They want to see a reason to buy. I'm not going to get too deep into this because this is like one of my little, I don't want to say secrets I do, but you have to understand so much retail, they need to see a reason to buy into calls. I'm not focused on, oh my gosh, we're pushing back up. I got to get in up here. I'm probably selling or trimming up here already. I'm focused on the bigger picture, like Ange was saying. Trends are still holding, support is still holding. I'm looking to get in on a heavy breakdown because I know it's approaching where people want to buy it up. I'm not focused on, oh, I want to see a few green candles, then I'll buy in. What if we would have pushed back up and then hit, which we didn't, but hypothetically, rejection zone right here. Breakthrough, recontest this historical support as now a resistance, and we come right back down. I'm not going to chase this. Since I missed the bottom, I'm not buying as this is going up. I literally watched this move up the whole time and did not buy a call one time. I watched it. Do retail use trend lines? Retail uses whatever they think is going to make them money. Going off basics and strategies, trend lines, higher low, support, resistance. Most people don't understand proper price action. Most people don't understand how to make proper support and resistance. They're focused on every little level. So as an example, Mo, so many people would put a level right here. So many people would put a level right here. So many people would put a level around here. This is way too much crap. Like I was saying earlier, I'm focused on the gap fills. I'm not putting levels all in between here. If I was a scalper, I would, but I'm always on the larger time frames. So when looking at what retail really does, it's all based off what they are doing for themselves. A lot of retail only uses a bull flag. A lot of retail only uses breakouts. A lot of retail only uses the MACD or the VWAP or EMAs. Everyone has their own niche. The main thing people follow and what hedge funds do, they know we watch trend lines. They know we watch support and resistance. That's why we have wicks. That's why we have these quick liquidity grabs. They break support, they push right back up and break above to the upside. They know retail chases puts. They know retail chases calls. So they want to shake them out as much as possible. This does not just happen because if you ask me, all this consolidation, people probably were thinking, oh, we're going to send the high of the day. And if they, which they do, they know buying the sell correlation, they know calls to put ratio, they know what people are doing based off buys and sells. They know where the volume is off of retail or whoever it is. I guarantee you they shook out all calls right here. And when people get bearish, they see a massive red candle. The first thought is, I have to get puts before it's too late. They probably see that. Or if you just go off the liquidity grab, sent it right back up. Retail goes with what they see, not what they trust. And that's why I'm trying to teach you guys to trust what is happening and not what is going to happen. I mean, I'm trying to teach you guys what's going to happen and not what is happening. You have to trust stuff that your mind is telling you, no, don't do this right now. Just wait and see what happens. Trust what you can't see, because if you size light and you let the move happen, you're going to be rewarded. One contract, which I'm speaking from what I wish I would have done right now. I'm not saying this because I did it. I'm talking from what I missed out on. One contract of a call here. If I would have realized this is a support, I have to trust it. This is going like this is the play of the day. One call contract on SPY, SPX, anything else that had a massive sell-off and push back up, one contract would have made you enough money to be done for the day. One contract. A lot of people think you got to size $1,000, $2,000. You can size $1,000 and make $300, 30% gains. You can also buy one contract on a position like this where people are fearful, put in $100, make 500. I did this last week and you guys, well, not you guys, but a few people were like, you literally risked only $200 to make almost 550. You have to play when others are fearful. You have to sell when other people are chasing. You have to use that to your advantage. It's very hard to grasp and comprehend, but that's the way of the game. You have to trade like a computer. You have to trust what's going to happen and not just what's happening right now. Everything goes off price action. Everything is going off an algo system. Everything happens for a reason. It doesn't just push again. Historically, this was going to happen. Having this heavy support, I'm not saying it has to come down to this exact level at the bottom. Anywhere in this area is going to be a buy zone. Pre-market scare, it gets everybody. We broke below in pre-market. We broke below after hours, whatever it may be. This could have scared so many people, and look what happened. We sent right back to the upside. I did not catch that. I did not play it. I don't play open. But just think about that for a while. If we had a heavy support and we broke through and instantly it opened, we pushed right back above, why would a recontest fail with buying pressure? Logically, I'm not saying visually, logically. If we were dropping below in pre-market, right at open, we broke right above. Any pullback to this zone where this red highlight is, size light and trust. Because if you're wrong on a light size, you can sell down 80% loss and you're saving money compared to sizing $1,000 and selling for a 30% loss. Trust the chart. Trust how you're going to buy this contract. And to end this quick little spiel I'm giving, let me pull up these volumes, which I don't know how to do this. I gotta go to indicators. There they are. Volume. There we go. Zoom in. Okay, so going off the 1 minute volume candles on the bottom, I'm not going off like high-tech crap. This is just a simple visual, basically. So when doing this, I want you guys to realize, look at the volume candles. I understand open is always going to have usually the most volume. So you have to comprehend that as a trader. Open, everyone trade, not everyone, most people trade open because they want to be done by 10 a.m. Eastern. They want to be done in 5 minutes. I just want to catch a low risk, high reward. I don't want to try and predict open. I don't want to try and predict price action. I don't like that stuff. I know how to do it, but when I started journaling, I realized when I traded open, it was 50-50 every time. I'm not dealing with 50-50. I'm not getting nowhere long term. Literally, when I trade, I want like a 1-3, 1-4. For every 4 losses, 1 win makes up for that 4 losses. For every 3 losses, 1 win makes up for it. I'm not doing no 1 win, 1 loss. I'm back to break even. I'm tired of it. I knew that for who I was. I took that out of my trading style. I don't deal with it no more. So as I see intraday form, as I see trends form, I'm using the larger time frame and correlating all this. Looking at the volume, we're going back to this double bottom practically. Volume increases and volume lightness. It's very important to realize, and this is kind of off topic for what we're talking about today, but I'm going to briefly talk about this and we can get into it when I stop this recording, whatever else may happen. When volume is light and we hold a zone, do you really think that's bearish? Low volume, but we hold. Imagine if the volume was heavier. Like, just think about that real quick. Low volume and we held. Heavy volume, that was at the very top. People that watch volume, they want to see heavy volume before they buy in. They need that confirmation. Why not use your zones and then see how the volume reacts after you entered? That's how I use my volume. I'll see how it's moving in the zone. I'll see if it's stronger, weaker, whatever it may be. But overall, I'm not basing entries based off, oh, there's more volume than usual. I got to get in. If volume is light in this area right here, and if you guys don't mind, I'm going to take away this red highlight. It's kind of distracting. This yellow highlight right here. Look at the volume. Almost the lightest on the day. And this was the biggest bounce on the day. Why do I need volume to tell me to buy? If we're at a double bottom, the last push, the volume was pretty heavy. A lot of people are like, "Why? I need to see heavy volume. I'm not going to buy in." You don't need volume for the price to move. You just need buyers. That's one thing I think a lot of people get confused with. You don't need heavy volume to move one way or the other. You just need one side to outweigh the other. So a lot of buyers, no sellers, we're going up. All sellers, no buyers, we're going down. Very little buyers, but even less sellers, we're going up. Volume is a nice visual, but I don't base my plays off it. If I enter down here at this double bottom, hypothetically, I enter at the second double bottom. As this moves up, I can look at the volume candles. Okay, volume's picking up, still light, still light. As I see volume staying level and very low, we're still moving upside. Why am I going to sell if volume is light and we're still pushing higher and higher? At some point, volume should increase more, and that's when I can get my I just saw what Am said. I can get my conviction as to, am I going to sell now? We broke previous high of the day. Volume is slowly picking up, slowly picking up. As we're breaking even higher, as we're breaking higher, now volume's heavier, it's heavier. Now we're back to consolidation. Volume is so light, probably the lightest on the day was right here. Do I want to keep holding based off low volume? If heavy sellers comes in, we're at high of the day, I bought the bottom. Do I want to keep holding? That's when I think about the mental processing of possibly other retail, possibly where is the zone? Where is this zone? If you guys remember, this area up here is the 30-minute cup and handle rejection. Do I really want to risk holding for more when I already caught the bottom and rode this up? That's when basically just common sense comes into play. How much more do you really want when you caught the best execution possible? Even if you bought in around this area, your execution was phenomenal compared to where current price action is. So why do you want more? Are you trading for the money or are you trading the chart? Because the chart's telling you this is a rejection. We may not break above. So why do you want more? That's very hard for even me to really process and do. But as I started doing that, I would sell at a zone. I'd be happy. A zone would break heavy on the downside. I'd get out because that was my sell point. I was happy. I followed the plan. Knowing when to buy, knowing how to use special systems. Let's go to the next day real quick. This was the half day, so volume was light all day. It's hard to really give an example for like a half day trading session, but I'll still kind of show you like what I would look for. Right away at open, obviously volume is always going to be heavy at open. As we form this slowly coming back down, pushing back up, this is when trends start to hold. Day of trend, very risky, not always good, but if you enter based off the trend, which as this forms, you're not going to make this trend off the first candle right here. That's so stupid. Don't form a trend based off one candle, off one wick. You need proper visual representation. Almost 4 to 5 back-to-back candles held this area. Now this is a trend. I'm using open price action with heavy consolidation intraday. This could hold and keep pushing. Since it was a half day, volume didn't hit as heavy, and we basically zoned the rest of the day. I'm just showing you an idea. This is not something you should take into accountability for trading. But if you see something like the first half right here, 4 to 5 candles, that's good to draw a trend. If you're doing it based off this one wick right here, you're basically setting yourself up for failure. If this does fail on the downside, that's normal because this trend is not strong. This is not a strong trend with one candle. But with having all these candles, this gives you conviction to enter and hold and trust. If you do enter off this trend, my personal cut, and I hope you guys are starting to realize this, the previous lower high, aka the start of this trend, this is my cut level. If we pull a VWAP, let's see where VWAP was on this day. Oh, crap, not that VWAP. God dang it. I'll get rid of this now. There we go. Let me find the right VWAP. Hang on, guys. Oh, that's my MACD. That's why. Hang on. There we go. So VWAP's the blue one. I don't know how to get rid of the above and below, but just focus on the blue in the middle. The VWAP was literally zoning in the middle. We have this trend, which I'm going to change the color since those other greens are kind of distracting. I don't know how to get rid of them. So this purple trend, notice the VWAP was rejecting until we finally broke above. The conviction I use. Yeah, so Ellison said loaded VWAP. If you want a loaded VWAP, that's perfect, but realize the opening VWAP was holding. It would wick below, come back up. I'm waiting for more than just one reason to buy. So me having a trend, me having possibly VWAP, you can use more than one bullish sentiment. You see what I'm saying? It's more than just, oh, this is the reason I bought. Well, this is the reason. This is the reason. This is the reason. I don't just want one reason to buy something. Seeing a trend hold with 5 back-to-back 5-minute candles, 4 back-to-back 5-minute candles. If I enter off this trend, my first thought process, if I use VWAP, if you don't use VWAP, this will not portray to you. If we break above VWAP and hold, I'm not selling my position. Because if VWAP does break above and hold, Keep this trend going. If we break below VWAP, the trend has to hold. If the trend doesn't hold, use the previous lower high. It's like a game. Use the levels as you move. Don't use the initial cut because now you're breaking up higher than usual. This is your cut level now. As VWAP holds, price action is moving higher. You're getting closer to high of the day. Understand, as prices move, you have to readjust. You're not changing, you're readjusting. Your entry point is now your cut level. Does that make sense to everybody? Don't keep the spread this wide. That's how you go red on trades. Be convicted on your execution and what you're going to do. Entry point was the trend line. VWAP's holding. Now, if VWAP does break below and the trend breaks below, I'm using the previous higher low right here as my cut level. It's very simple. It may seem complicated, but this will save you a headache of, oh, we broke this level. I want to see if we push back up. Don't put yourself in a position to fail when you executed perfect based off trend and VWAP conviction. Now going to today, I'm going to take VWAP off because I don't want to deal with this. And I don't even know how to do this. Let's see. How do I do this, guys? There we go. No, that's not it. Wait, is it? Oh my gosh. Someone help me out here. How do I get rid of the VWAP, guys? Do I click on it? Remove? Aha, there we go. I'm like a little kid. Okay. So now we're using the same idea. This trend line is obviously from larger time frames. So don't use that when you're looking at the day of only. If we zoom out back on the 15, the conviction's there to trust. But end of the day, focus on what's happening. We pushed it open. We got this consolidation on top. This would be a quote unquote sell level if we push back up the high of the day. Oh, what do you know? End of the day, we pushed up there. If you catch anything on a bounce, realize where the cut is going to be, where the sell is going to be, understand where your sell level is going to be. For me personally, I didn't trade anything on SPY. I didn't trade anything on SPX, so I can't talk like in detail because I don't like hypothetically speaking on if I entered, if I did this. I'm going off the chart and not what I would have done. We all understand what happened right here. I deleted that level, but there was a support around here. So when this drop off happened, the main thing I'm focused on, opening print, if I entered on that call in the dip, this is my cut level, is the opening print. Only because hypothetically trends held in the larger time frames, opening print happens for a reason. The stock doesn't just open at that level for no reason at all. There is a reason a stock closes at a specific level. There's a reason it opens at a specific level. So you have to use everything possible to give you that, okay, this is why I'm going to enter. This is why I'm going to sell. Having more than one reason is not like mind-boggling or very like hectic. The more bullish sentiment reasons to enter calls, the more conviction you have to trust. If you're entering because, say you don't even have a trend here, you don't have this support, you don't even know there's a rejection up here at this red highlight, you're not even focused on the opening day high of the day, and forget this highlight right here. All you're looking at is candles. Say this heavy sell-off happens, we start to push, we push. Well, I'm going to enter calls. Okay, so what's the plan? Why'd you enter? Oh, well, I'm seeing green candles. Okay, well, everyone sees green candles, but what are you doing specifically to make you buy in? Like, where's your cut if you're wrong? Where are you going to trim if you're right? People don't think about that before entering. They rush in, and then hypothetically, yes, we kept pushing. So this example is like all invalid, but say we reject. Are you going to sell because, oh, a heavy red candle, I have to get out before it's too late? Are you not realizing this could be a bounce zone? Like, if you're on the 1 minute, not focused on the previous intraday drop off, this could hold as support. So why would you sell at this yellow highlight because, oh, I'm down 30%. I can't afford to hold this. It could bounce. If this would have pulled back after being up to like right here on this push, if we would have pulled back to this level, I would have entered calls because conviction wise, there is a reason this could hold. Does that make sense to everybody? I want to see a few yeses or nos. I don't just want to like talk to myself or anything. Okay, yeah, there we go. Yes, yes, yes. Every support that breaks on the downside switches to resistance. Every resistance that breaks on the upside now switches to support. Everything follows. It's like follow the leader. You don't just break a level and it's gone forever. Once we break, I'm going to go back to the 30-minute. I'm going to end on this for you guys. Look at this cup and handle. I'm going to keep talking about this because one way or the other, we're going up massive or we're coming down massive. We may have a heavy wick on the upside and pull back. We may have a heavy wick on the downside and push massive. This zone right here is literally all that I care about. Right here. Until we break above. And if we do break above and I don't get calls on the downside, I want to see us break and pull back and hold as support. That is the only way I will, quote unquote, chase calls at that point. I'm not buying the breakout. A lot of people buy the breakout because, oh, we've been consolidating for 3 days. Volume's going to make it keep going higher. I 100% understand that, but that is not who I am as a trader. I don't care about making money. I care about buying in. And if I do sell for a loss, I'm not looking back a few hours later saying that was so stupid. Why did I do that? I hate telling myself, why did you do that? I'd rather look at the trade and tell myself, okay, we broke out. I'm going to wait now. If it keeps going, it's whatever. At some point, we have to have a retraction. At some point, we're going to hit the next resistance and we can catch and see how it reacts to that next zone. Everything is like follow the leader. As one level breaks, it has to hold its support to keep a trend going. Notice how this trend should align. And actually, let me delete this yellow because that's off-centered. There we go. You guys comprehending this a little bit better? I want to see a few yes, no's, and then I'm going to cut this recording since we're over about 20 minutes. I'm hoping you guys realize everything happens for a reason. There is no such thing. Oh, here we go. AI, bro. Here we go. There's no such thing as, oh, where's the next support? Every support break is now resistance. Every resistance break should logically act as support. If you don't believe me, let's go back a little bit before I end this. Look at this right here. Actually, let me go to the 2 hour. Boom. See this right here? Boom, heavy rejection. We finally broke the cup and handle. We're pushing. Logically, from a larger time frame, I'm not chasing calls. Pullback happens, look at that. Historical resistance, flips the support, and we bounce massive. I will wait as long as I have to catch that move. I'm not content catching a 10-point move on SPX. It's nice, but I know my potential. I know what I'm capable of. I know my patience is better than most people. I would rather wait than just chase and pray that that thing keeps moving in my direction. I wish I would have entered longs down here. I didn't, but I caught the move. Trusting the chart, I'm still working on that myself. No one can trust the chart every single time. It happens to people. You never sell at the best point. You always miss out on gains. But it's the point of telling yourself, my execution was perfect. My sell point I'm pleased with because a level was approaching. Whatever happens after, it happens. If I can afford the trim, I can leave runners. If you can't afford runners, you cannot hold one contract for 200% gains. You have to take those singles and those doubles. Eventually, your runners are going to be home runs after home runs. So trust it, know how to buy, and understand every zone is going to recontest. Every zone has a purpose. It never goes away forever. Everything recuperates. Everything reprocesses, like the system. Just because it broke out does not mean it's gone forever. Everything will happen again. Price action, I don't say spies back to 200. We're past that support because until 200 touches, we got this zone. We got this zone. We got this zone. It's like a staircase. Larger time frames, find that picture and just be patient and wait.